Hey everybody, we're going to talk dividend ETFs today. Before we do, please click subscribe to my channel and take a look at the link you see on your screen right now for a message from our sponsor, The Motley Fool. You can get the top 10 stocks to buy right now. So dividend stocks are a great way to invest for the long term. It's not just income they can produce. You might be surprised at the kind of total returns you can get with them over time. And dividend stocks as a whole also tend to have less volatility than the overall market. Now, if you're not comfortable picking a lot of individual dividend names, let's just say you don't like buying individual stocks, maybe you're a more growth-oriented investor, but you recognize the need to diversify a little bit, there are some great ways to invest in dividend stocks by ETFs. ETFs aren't just for the benchmark indexes you know, like the S&P 500 and for individual sectors. You can also get a lot of ETFs that specialize in stocks that pay dividends. So in no particular order, here are my 5 favorites. Number 1 is the Vanguard Dividend Appreciation ETF. Ticker symbol is VIG. See, not the highest dividend yield, but this doesn't focus on necessarily high dividend stocks. It focuses on large cap stocks, so solid companies with great records of dividend growth. It owns 289 stocks. See the top 5 listed right there: United Health, Johnson & Johnson, Microsoft, JP Morgan Chase, and Visa. Solid companies, great history of dividend growth. So not only does this pay you a nice income stream and have some growth potential, but the dividend yield the dividend you get should rise significantly over time. Number 2 is the Vanguard High Dividend Yield ETF. Ticker symbol is VYM. This, if I had to name a favorite out of the 5, just if you were going to buy one, it would probably be this one. Slightly higher dividend yield than the first one, 3.2% yield. Same expense ratio, so no higher fees. This is actually a bigger fund when it's in terms of assets under management. And unlike the first one, this doesn't focus on dividend growth. This focuses with stocks that pay above average dividends. It owns more stocks than the first one. It owns 441 stocks altogether. And you might expect there are some oil names and some banks and things like that in there. ExxonMobil, Johnson & Johnson, JP Morgan Chase, Chevron, and Procter & Gamble are the top 5 holdings. The biggest differences between the first one and the second one here are that the first one owns a few more growth-oriented stocks than the second one. Growth stocks with a lot of growth potential, generally don't pay out above average dividends. A lot of them do pay dividends, like Microsoft, but they're not going to be high dividends. So you get a lot more value stocks in this one. You get some more growth stocks in the first one. They're both very good dividend ETFs. I don't think you'll go wrong buying either of them. If your goal is to maximize income, this one, the VYM, is the way to go. So moving beyond those, this is kind of a different approach, and this could be a great fund for investors who are worried about the turbulence in the market right now. This is the Invesco S&P 500 High Dividend Low Volatility ETF. I know that's a mouthful. The ticker symbol is SPHD. You see, these are stocks that not only pay high dividends, but their stock prices don't jump around as much as the average stock in the market. So it owns 50 stocks, all of which have below average volatility, higher expense ratio than the first 2 funds I mentioned, but that's kind of common when you get into more specialized ETFs like this. The more specialized a fund is, generally speaking, the more you're going to pay for it. Not a high expense ratio by any means, but it's worth noting it is more expensive than the first 2. Higher dividend yield, 4.2%. You see some of the top holdings: Altria, AT&T, Verizon, Kinder Morgan, and Simon Property Group. So those are the types of companies it owns. Not exciting growth companies, but companies that generate tons of cash flow that pay that out to shareholders. So next is another kind of dividend growth ETF. This one is the iShares Core Dividend Growth ETF. DGRO is the symbol. Low expense ratio, slightly higher dividend yield than the other dividend growth ETF on this. This focuses on 2 things: not just companies that have a great history of growing their dividend, but companies that have a low payout ratio, meaning that they're paying out a relatively low percentage of their cash flow. That leaves a lot of room for future growth. You see, there is a lot of overlap between this and the other one, but not a ton. Like Apple, for example, is the top holding of this ETF, but wasn't included in the other one. ExxonMobil, Microsoft, JP Morgan Chase, and Johnson & Johnson round out the top 5. You see there's a nice combination of growth and value in this one. So not only does it generate a nice dividend yield, but it has a lot of share price upside potential over the long term as well. Last but certainly not least, the WisdomTree US Mid Cap Dividend ETF, ticker symbol DON, is one of my favorites. If you noticed about the four that I already mentioned, there's quite a bit of overlap. They all focus generally on larger companies. They're market cap weighted. They have a lot of big companies that make up a big portion of the fund. So there's a lot of overlap. If you have enough large cap exposure in your portfolio, this could be a good way to diversify. The dividend yield here is 2.7% right now. Low expense ratio, 0.08% is pretty low. This focuses on companies with dividend growth and that are in the mid cap space. Top five in this fund are Chesapeake Energy, Packaging Corp of America, Paramount, International Paper, and Franklin Resources. If there are some names on that list you aren't familiar with, that's kind of the point here. These are stocks that are too small for most investors to really be popular among investors. So hopefully you found this informative. I would love to answer any questions you have about these dividend ETFs. Please leave them in the comments. I'll get to them individually as best as I can. And I look forward to hearing from you. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.